Hello everyone and welcome back to Fun with Fitzy. We are now on chapter 6, one of my favorite chapters, and this is video 1. And we're going to review the periodic system as well as get into the valuation of inventory. So some of this is going to be review from you because we did it in grade 11. So back to inventory basics. In the balance sheet of merchandising and manufacturing companies, inventory is frequently the most significant current asset. And we talked about that in the last video. Inventory is a huge number. And if we do Magnata Winery this year as our summative project, you have to look at that company's financial statements. You'll see inventory is huge in that company. In the income statement, inventory is vital in determining the results of operations for a particular period. Okay, so because gross profit is calculated by taking your net sales minus your cost of goods sold. And gross profit is closely watched by management, owners, and other people because it's really important to make sure that the company's sales are higher than its costs, enough to cover all of their other expenses and still make a net income for the company. So we talked about Perpetual in the last chapter, chapter 5, and we know that in the Perpetual system, inventory is updated and cost of goods sold every day after every purchase, and so we always know what the value of our inventory and cost of goods sold is. Where in grade 11 we looked at the periodic system and we did not know what our cost of goods sold was until the end of the period, and inventory was not accurate either. So we're going to look at the periodic system again. So review of grade 11. In order to prepare financial statements, it is necessary to determine the number of units in inventory owned by the company at the statement date, and we need to value them. This determination of the inventory quantities involves 1. Taking a physical inventory, which means counting. 2. Determining who owns the goods, because if you don't own the goods in your warehouse, you shouldn't be counting it. If you don't own the goods in your warehouse, then you should be counting it. And a physical inventory also involves counting, weighing, or measuring each kind of inventory because sometimes you can't count things. For example, my husband's business manufactures insulation, and they make it from rocks. So it's not easy to count that, so they weigh those raw materials. A company, in order to minimize errors in taking the inventory, should adhere to internal control principles by adopting the following procedures. People who do not have responsibility for the inventory on the daily basis should do the counting. This is called segregation of duties. So, for example, the manager of the warehouse at Molson, where my husband also used to work, should not be the one counting the inventory because he's responsible for that inventory on a daily basis. Each counter should establish the authenticity of each inventory item. So that means like open the box, make sure what's in it is actually there, that sort of thing. Another employee should make a second count. So you have 2 people counting the same and make sure their numbers are the same. If not, have a third go back and count. And then some companies use a tagging system where they put tags on the items that have been counted. And I don't expect you to worry about that too much. And at the end of the count, a designated supervisor should ascertain that all inventory items are tagged and no items have more than one tag. So that means that everything is counted properly and only once, or included in the count once. Now, we talked about FOB shipping point and FOB destination when we were talking about purchasing. So again, as a reminder, FOB shipping point means that it's going to be free to the shipper, and FOB destination means it's going to be free to the buyer. Okay, so we also need to talk about when ownership passes here. Okay, when it's FOB shipping point, it's free to the seller and the buyer is paying. So therefore, the minute it gets put on the truck right here, that's when the ownership passes. So when you have to count this inventory, you got to include the inventory on this truck when you're counting it. When the terms are FOB destination, it's free to the buyer and the seller is paying for the freight. In this case, the ownership passes when the truck delivers the goods to the buyer. So whoever is paying for the truck owns the inventory. Therefore, they need to count it in their inventory. Let's talk about consignment. Consignment arrangements, the holder of the goods. This is like you've heard of consignment stores before. Well, consignment stores, you go in and you purchase items that are not owned by the owner of the store. So the holder of the goods is called the consignee right here, and they don't own the goods, they're just selling them. The ownership of the goods remains with the shipper of the goods, or the person who put it in there, consignor. And when the owner is doing his inventory, he needs to remember all of the goods he has in different stores and make sure he counts them. Whereas the consignee, the person who does not own the goods, they do not include these goods in their inventory because it's not their inventory. I used to own a saddle. I used to own a horse, and I used to ride. And my saddle I sold on consignment at a saddle store. And the owner of that saddle store should not include my saddle when he counts his saddles, because my saddle is my inventory, not his. So again, as a refresher here, consigned goods should be included in the consignor, the owner, not the consignee, the person selling it. This is the seller. Okay. If it's owned by the consignor, do not count in the consignee's inventory. By now, you should be able to explain how to do a physical inventory. Definitely know FOB shipping point and FOB destination. Explain who owns the goods on consignment and things like that. Hope this helps, and thanks for watching. See you next time.